Hello learners, welcome to Commercediction. Myself Riya Das. Today I will discuss about what is assets and what are the types of assets in detail, and at the end of the video you will get some MCQ on the assets. Now let us know what is the meaning of asset. Asset is a resource controlled by the enterprise as a result of past events and from which future economic benefit are expected to flow to the enterprise. Example, machinery, furniture, building, cash. So these are some assets. So we can say asset is something which is purchased by a businessman or it has been taken on lease or rental basis, so it has a control over by the businessman. Now these assets provide some future economic benefit, or the businessman expects some future economic benefit due to the use of these assets. Now how it provides future economic benefit, let's see one example. Suppose the businessman has a machinery and it as lifespan may be for 8 to 10 years. Now on using this machine, it produces some goods and these goods are sold in the market, and on selling the goods the cash flow to the enterprise. Now this machinery helps in the operations of the business. In this way it provides some future economic benefit for certain number of years. So the asset is used for the benefit of the business and not for resale purpose. Now let us understand the classification of assets. First, on the basis of convertibility, that is how easily it can be converted into cash. Accordingly, it is of two types. First, current assets. Second, fixed assets. Now what is current assets? These are the assets which can be easily converted into cash within 1 year. For example, stock, debtor, prepaid expenses, cash in hand, cash at bank. Now if there is a stock in the business, it will be sold within 1 year and gets converted into cash. Similarly, if there is a debtor, it means we have sold goods to a customer who is called debtor. Now the customer has to repay the amount to the businessman within 1 year. So it will be also be a current assets. Now what is fixed assets? These are the assets that cannot be easily and readily converted into cash and cash equivalent within 1 year. It means they take more than 1 year to get converted into cash and cash equivalent, like treasury bills, commercial paper or marketable securities. Okay, they take some period of time to get converted into cash, but they are similar to cash. Now for example, machinery, furniture, plant and building. Okay, so these are some fixed assets. Now suppose by using machinery we are doing production of goods. Now that goods will be sold in the market and then the cash will flow to the enterprise. So it takes some period of time to get converted into cash. So these are called fixed assets. Next, on the basis of physical existence. On the basis of physical existence, it is of two types. First, tangible assets, and second is the intangible assets. First, let us know what is tangible assets. Now these are the assets which can be seen, touched, felt and can be measured in terms of money. Example, land, building, furniture, machinery. So these are the assets which can be seen, touched and felt. So they are called tangible assets. Now what is intangible assets? These are those assets which do not have physical existence, that is neither can be seen nor it can be touched, but can be measured in terms of money. So they are called intangible assets. For example, goodwill, patent, copyright. Now these are the assets which do not have any physical existence, but they can be measured in terms of money. So they are called intangible assets, or they are within the assets. Okay. Next, on the basis of usage. If assets are to be classified on the basis of their usage or purpose, it is of two types. First is the operating assets and second is the non-operating assets. Operating assets, from the word we can itself know that the assets which help in the daily operation of the business. Let us see the definition. These are the assets that are required in the daily operation of the business. In other words, the operating assets are used to generate revenue from a company's core business activities. Examples of operating activities include cash, accounts receivable, building, equipment. Now these are the assets without which the business cannot run. So they are called the operating assets which help in the daily operations of the business. Now what is non-operating assets? These are those assets that are not required for daily business operation but still generate revenue. Example, short-term investment, marketable securities, vacant land, interest from fixed deposits. Now these are some of the assets which are not required in daily operation but they provide revenue to the business. So they are called non-operating assets. Example, as we know, short-term investment, marketable securities, land or interest from fixed deposits. Now let us understand some other kinds of assets like fictitious assets. Now the word fictitious literally means fake or imaginary. It means they are not the real assets. These are the expenses or losses that are not fully written off in the year of occurrence but are amortized for more than 1 year. They do not have physical existence or realizable value, so they are not shown in the books of account. They are part of intangible assets. Example, preliminary expenses, discount on issue of shares, advertisement. It means fictitious assets are the expenses or losses which are incurred in huge amount in a particular year, so they are not charged the PL account, or we can say the trading and profit and loss account, because on charging the fictitious asset to the trading and profit and loss account in the year of its occurrence, the business may suffer loss. So they are amortized partly in the year of occurrence and next balance amount are carried forward to the more than 1 year, because we get benefit from that expenses for more than 1 year. So we charge them for more than 1 year and the business will also not suffer loss in the year of its occurrence. Let us understand what is vesting assets. Assets are those assets which have a limited life and its value decreases over time due to extraction or use of asset. Example, natural resources like oil, natural gas, coal, timber, financial instrument like option, contract. It means these are the assets which have a limited life. So on using these assets, its value gets decreases. Now let us solve some MCQ. There is a decrease in its
First
value, or
is,
because it
which
takes
of the following
more than
is not
hundreds
an
of years to
intangible
get
asset?
replenished.
Research and development cost,
As a result,
B.
its
franchise,
value gets
C.
decreased.
copyright,
Okay.
D. trade name. Now give your answer in the comment section. Second question is, which of the following is not an intangible asset? A. patent, B. franchise, C. goodwill, D. oil reserve. Now third question is, which of the following is not an intangible asset arising from a government grant? A. goodwill, B. patent, C. trade name, D. trademark. Now give the answer in the comment section and I will provide you the answer in the next video. Thank you for watching my video, and if you like my video, please do like, share and subscribe.